When you remove the layers, simplicity and speed happen. Ginni Rometty. My friends, we have honed it down to a razor's edge. And we're going to jump into these charts and go through all of them. I hope you have been enjoying all the training that we have been putting out for you. It is my best work to date, I'm convinced. I think you will be too if you will take them. There is so much I have put out there for you in just the last few days. I really want you to lock into it. The success multiplier formula, the wave trading technique, the always winning strategy, the maximum success with the ATR, and of course the latest training that I put out for you on how to use the profit loss measuring tool. Just put that out today, and I'm just excited about all of it. And of course, we've switched over. We're using the new charts. Nothing for you to be frightened about, nothing confusing. In fact, even simpler, even easier. We're using the STC. You might say, Tom, what is the STC? Take the training that we just put out on the wave trading technique. Very similar to everything we've done before. The STC is what? It's a hybrid of stochastics and our favorite MACD. Of course, we use the price percent oscillator, which is a percentage version of the MACD. This puts in stochastics. It uses cycles and time as well as using the moving average convergence divergence. So even better, I have found. And I have been doing this for many weeks now, taking me a while to sort of pull everything together, get all those new trainings together, get them launched for you, and then break you into this. I think you're going to be as excited as I am. Now, let's jump into these charts and see what's going on with the S&P 500. We'll then look at the Qs. We'll look at 20-year bonds. We'll look at gold. We'll look at Bitcoin. And then I'm going to show you, I think I'm going to throw this in every day, a trade that I'm in, that I'm working on, where it's going, what I'm up to on it. This is Newmont. So we'll get to that in just a minute. But let's first start with what's going on the charts when it comes to the S&P 500. Now, we look at the weekly chart, always a good place to start. Where is it? Well, it is going down. It is heading down. It has been up. Oh, it's been up, down, up a little, and then back down again. The STC stayed negative this whole time, going all the way back to the beginning of the year. Now, that is on the weekly chart. We go to the 2-day. What do we see there? The 2-day still above the 200 period, the 200 EMA. But what do we see going on? Just turned negative, flipped over negative on the 13th. And as we get into the latest candle, we can see that it is continuing to head down, hitting a lower low. You will also notice, and I'll talk about this when we get to the half-day chart, what do we see going on the half-day? Well, it crossed over the 200 period going into the short range. It did that back on the 11th of April. Now, it switched over originally back on the 5th of April. We did not get in because it was what? Still above the 200 EMA. It's since moved over. We didn't have a jumping in point. That's okay. We don't have to get on everything. Where is it right now, though, when you go to apply our success multiplier formula? It is a 15. That is as negative as things get. That means it's negative what? On the chart that gives us the 1, that's the half day. Then 4 times the half day is what? The 2-day. That's 4 more points. 10 times the half day is the weekly. That gets us to 15. So again, things racking down as far as the overall market goes. What are we waiting for to short the market? We're waiting for a bump up and then a roll back over. It'll get us back in, waiting for it to go to green maybe, and then flip back over to red. But that's not happening right now. Let's go back to the weekly. We're going to go to one of our favorites, the Nasdaq 100. What do we see going on there? Well, it's red and has been red since when? About the same time that the S&P 500 rolled over. It had been going up, then down, popped up for 2 decent weeks. the 21st and the 28th of March, and then sort of peaked out and has been continuing to move down since then. Never got out of the red on the STC. We go to the 2-day, and of course it's just now touching and pushing through the 2-day, the 2 days 200 EMA. So what does that represent? That's 400 days exponential moving average. Just now starting to push through. Flipped over on that 2-day chart above it, but again continuing to move down. We go to the half day. What do we see there? Well, the half day, actually when it started to cross over, you can see we did a trade there when that started occurring on the 5th of April. And if we go to it, you can see that we actually shorted the Nasdaq 100, did that with PSQ. And what did we do? Well, we set in a stop at 2.16. Double that, of course, is 4.32. And you might say, Tom, why did you set your stop there? Because it was the top of the average true range. That, of course, is where you put your stop in. If you've taken the Maximizing Success with the Average True Range training, you know that. That was our stop. If it had hit that, we would have bounced out. It didn't. We went with a risk ratio of what? 1 to 2, which is what I teach. Also, I reduced my position based upon the percentage amount of risk. That then brought my typical $100,000 trade down based upon the risk that I was taking of 2.16%, which it's pretty easy. You divide 100,000 by 2.16, and it was just a little less than a $50,000 trade. That meant the most that I would lose because of the 2-to-1 ratio that I use and the 1% loss I'm willing to take. That would have been $1,000. So what did I make? I made $2,000 at the 4.32% level. I made a 2% return on the $100,000 adjusted for the risk. Does that make sense? If it does, great. If it doesn't, take that training. It's all for free. So what do we see happening here on the Qs? Continuing to move down. And again, moving down quite hard. It's a minus 15. That is as high as it gets with the push down in the market. That is where we are when we look at our 2 stock indexes. Now we're going to go back to the weekly and we're going to head over to 20-year bonds. What do we see going on there? Well, you can see minus 15 right there coming in. It is again continuing to plunge down, starting the week off down. We go from the weekly to the 2-day. Of course, we can see well below the 2-day 200 period EMA, 400 days. We see it moving down, red down candle forming again, continuing to move down. And you can see another trade that we had in here. This was just a test trade. I didn't actually trade this one, but I went ahead and marked it just for you. And what do we see going on there? Again, set the stop loss just above. This was another short trade. And of course, when the STC reverted over, look at that, 15. That is the highest down push you can get. So of course, we jumped into that. We set our stop loss at 1.90. We came up with that figure. Why? Because if you look, it's going to change. I'll come back to it. But you see that the red figure right there? That is the ATR. And when I go there, you can see that the figure, well, it's not the red figure we want. It's the one to the left of the 132.06. What is that? That's the stop loss that I put in. That is the ATR at the top. And of course, it changes. It ranges every day. We doubled that for the stop loss. And of course, it was another successful trade. So things again are looking great if you can trade in both directions. Even when the markets crash, you have opportunities. That's what it means to be educated. Let's look at gold. Gold has been nice as of late. Look at that. Gold is going up quite nicely on that weekly chart. Again, in the green even today, up 0.31%. Now we go to the 2-day chart. What do you see there? You see again 3 2-day candles moving up. You can see where things flipped over back on the 13th. And if we range down to the half-day chart, you can see our practice trade. I did a silver trade at the same time. I didn't put double the money. I wasn't going to take the risk of getting into silver and gold at the same time. Silver trade came up before, so that is the one I took. I let this gold trade run out. I nonetheless tracked it for you. And again, nice successful trade. Had a risk of 1%, so you would have been close to $100,000 that you would have put into that trade if that happened to be your trading amount. And could have been 10,000, could have been $1 million in a practice trade, okay? And what did we see? We saw a 2% return pretty quick on. Then things pulled back in gold, if you remember, back there on the 14th. When things pulled back. That was right after I had closed my silver trade. But you can see again, and what is gold doing right now? Actually, it went from an 11. If you go back and you look at the 2-day chart, you can see that it was actually going down when that trade was entered. It later flipped over right as that trade was ending, or right after it ended, I guess. It popped over. The 2-day did, so that drove it up to a 15, but we didn't have a jumping in point at that point. And again, you don't have to get greedy. You don't have to enter every trade at every potential opportunity. Let the charts work for you. Don't kill yourself. Now, let's take a look. We'll go back to the weekly. Let's take a look where Bitcoin is on these charts. Well, Bitcoin is down. Now, I'm looking at the VanEck. And one reason I'm not using the New York Stock Exchange Bitcoin Index is it only reports once a day. So I am using the VanEck. We don't have the benefit here of the 200 EMA. If I go to just the 24-hour-a-day traded Bitcoin, you can see it's above the 200 EMA. But if I go back to the futures ETF of Bitcoin, which I like to trade, you will see that it, in fact, is going down. We look at the 2-day from the weekly, it also is down. We go to the half-day, and you can see where we're just now getting a 200 period moving average line, again representing just 100 days, because remember, this didn't even form until November, I think early November of this last year. But that's finally starting to show. We can see we're just below that. As we were pushing down, we actually did a practice trade here. Now, I've not been shorting Bitcoin at all, but I wanted to start practicing it, so why the hell not? We did. We again used our average true range to set our loss, and we tracked a potential down trade quite successfully, down 7.85%, just to show that it can be done. It can be done using these charts. Isn't that beautiful, friends? Again, another 15, negative 15, going just the right way using the success multiplier formula. Now, again, I hope you guys are enjoying this as much as I am. I'm enjoying it quite a bit. Let me show you lastly, just for good measure, I'm going to show you a trade that I am currently in, that I jumped in when it turned from a 14 to a 15. I jumped into Newmont Corporation. They are, again, a mining, precious metals mining company. Went from a 14 to a 15. It had a pullback. I'd already actually successfully traded in this last up move, so I was keen on it to give me another opportunity. Pulled back a little bit, started going up, dropped, and then when it made this most recent climb, I jumped in. I keyed into, of course, my stop being at 3.08% down, and of course, heading up to hopefully I'll be clearing 6.18%. And again, what did I do? Well, I adjusted my play based upon what? Based upon the risk. So I cut down my $100,000 amount because, again, I want to risk $1,000 to earn $2,000. That is my goal day in, day out, time in, time out in jumping into these trades. And as you know from the always winning strategy, if you will work and can at least win just a little less than half the time in these trades, you will find yourself successful. The better you can do it, the better you get, the more and more exciting green you will see in your practice trades. I hope you enjoy what we're doing. I hope you'll share it with your friends. I hope you'll take all those free trainings that are available. Everything we do here, we do for you. And you notice, not pushing anything, not telling you that, oh, if you just pay, you get the rest of the answer. My friends, if you want to support us and help us with the valuable work we do because you're getting something from it, then by all means, go to Patreon, sign up. All sorts of great stuff for you there. But that's not what this is about. God bless. All the best from the whole team at Charting Wealth, World Headquarters.